Hello and welcome to the channel. Please note that all the information disclosed in this video is for educational purposes only and none of it constitutes the investment advice. So today's idea is an organization called United Rentals Stock, URI. In terms of what the organization does, they provide facilities and machinery rentals to various companies. They have a diversified customer base. Good chunk of that, around 48% of their sales, is within the industrial sector. 47% is non-residential construction, and 5% of their sales is multi-family construction. So you have here an organization that serves in arguably a cyclical economy, but the business model, if you think about it, is not that cyclical. Reason being is we are at the moment in a paradigm shift a little bit in the manufacturing and overall construction space, where these operators want to operate in a way that is as lean as possible. All right, so rather than buying their own fleet of vehicles that they need in order to perform and pull these construction projects, they rent on a temporary basis the assets of this company. So even when there are no there's no much activity going on in the manufacturing sector, if you've been keeping an eye on PMIs, they've been going down consistently and remain subdued in the manufacturing space. You do have quite a few tailwinds in this sector that remain quite quite hard, right? So let's not forget the tailwinds that the construction sector is experiencing. You have the infrastructure bill with a budget of 500 billion. There's a lot of electric vehicle investment going on, valued at 300 billion. Semiconductor manufacturing, 200 billion. North America LNG projects, that's 100 billion. And they're benefiting as well from the Inflation Reduction Act, which is 1 trillion. What is also forecasted to keep growing is non-residential construction because of all this, right? So overall, the sector has increased its penetration rate from 42% to 57% between 2009 and 2019. So that's pretty good and consistent growth. Okay, and you also have that rate of growth being bolstered by the COVID-19 pandemic, where there were damaged supply chains, you had long leads and lack of new equipment being brought to the market. So these guys definitely benefited from that. So if you look at my screen here, we are looking at a chart which has been taking place for the last 3 months. It doesn't look great, as you can see, because as of August, the stock was around $460 levels. It was ranging from there, and then just as with the rest of the market, in early September dropped rather precipitously. So back then, because this is stuff that's been on my watch list for quite a while, where I had a bullish predisposition on, I wanted to enter, but I considered that these levels here, I think that's when I started looking at it, were too high. And I was also aware that the earnings, this blue square here, was taking place at the end of October. So that seemed to be the right call not to enter the stock back then. I wanted to just wait and see how the earnings came out, and they did come out positive. So you see that there was a little bit of a down and upward movement. We had just today the Fed interest rate decision with the manufacturing PMI. But the technicals look actually quite okay. Seems like the stock is taking off. We have the MACD here just about to cross, and most importantly, part of the reason why I didn't enter the stock back then. Look at the stock in early September, trading at 15 times earnings when it was around 492. Now it's around 12 times. So my positioning for this is I have entered the stock now at around a multiple of 12, and probably will be looking at an exit of 15, retesting that 500 level, potentially more, if the market changes or we receive further management communications, because the earnings report was actually quite positive. Uh, Management reaffirmed their guidance for 2023. They also beat earnings, so it all sounds quite encouraging. And I do think that at the moment the market is a little bit scared, specifically in the manufacturing sector because of the negative PMIs that we have seen. But that downward momentum seems to be picking up a little bit. If that mood changes, I think it's very likely that this stock moves up. If not, it's still a side of that market that is doing quite well, and where you can definitely have a long side like this, right, in a trade versus a short idea in the sector. So you can perfectly hedge that and generate alpha. So overall, quite like this idea. Let me know if you have any questions or comments, and happy trading.